Hello, everybody. Give me a minute here getting started. You guys should be able to see my screen. Gonna give people a minute before I really get started to get in here. All right, just waiting a couple more minutes here. All right, can you hear me better now? Good evening, everybody. All right, we'll get started now. So, in case you don't know me, my name's Drew, aka Catching Rockets. Tonight we're going to be going over um, points of control, virgin points of control, value area, volume profile, and supply and demand. Sorry. And also, really quick, I have like a really bad cough. So if there's a pause in my speech, it's because I muted my mic and I don't want to cough in your ears. If I do cough in your ears, I apologize. Um, but I really like to do as much educating as possible and try to help people out. For the people in orbit, if you have questions, you can ask in Orbit's chat, or you're always welcome to unmute yourself and just start talking. Never have pants on. Coast to coast. Love the name. Um, all right, anyway. Anybody want to throw out a ticker, preferably one that's not like something I probably already have charted? USO. Doesn't sound like a good one, but take a look. Oh, United States Oil. Never mind. Okay. Excuse me. So, when we're looking at, actually, let me step back. You know what? I don't even know that I'm going to like this ticker. Nothing personal, noise. But there isn't much for me to chart on here. Sorry, anybody else got a ticker? Coin. Need more volume. That's the second person. Let me just check my mic volume really quick. Never hear any points about, oh, needs more volume, the ticker. Got it. Affirm. Yeah, we can do affirm. Oh, where did I type that? So honestly, the ticker is not going to matter very much. Let me remove my drawings. God, they got wrecked, huh, for earnings. Sorry, I just had to cough again. So, like I said, we're going to be talking about the point of control. Um, for anybody who's not familiar, in the description of this live, there's going to be links for ThinkOrSwim or for TradingView, how to get it on your screen, or I mean on your charts. I'll go over it really quick for TradingView. You have to subscribe to TradingView. It's like $15 a month, and once you subscribe, you just search for VPSV, and you want this one here, volume profile session volume. You don't want the HD one. You want this one right here. So once you have that on your chart, you are good to go. And then we'll start talking about what this is exactly. So if I zoom in on a day here, let me just get zoomed in so everybody can see it more clearly. So on this day, February 10th, this is my volume profile here. And this red line is going to be the point of control for this particular day. And what the point of control is the area on the chart where the most trading took place on any given day, buying and selling. I do get questions like, do I chart these with extended hours on or off? I always chart them with extended hours on, and you want to be on the 30-minute time frame. If you're charting on ThinkOrSwim, you want to be on the 30-day, 30-minute. Seraphin, we will do SPY at the end. I want a clean chart. I have a lot of stuff on my SPY chart. Sorry, more coughing. So like I just said, so this is going to be the area where the most buying and selling took place on this day. And the reason that that's important is if we look here, you know, if we go back, like, you know, this is not the all-time high for a firm, but if you're a retail investor and you bought here, it feels pretty damn high. So think of yourself as a retail investor buying stocks. I know a lot of people that are here in this live are going to be mostly option traders, but think about yourself if you were to buy stocks here, you know, it's $78.61. You're going to be pretty sad the next day when it's down at basically $50 a share and then goes even lower. So then think of yourself as a retail investor. The next time, if you bought shares here, the next time a firm gets back up to $78.60, what are you going to do? And most people will say sell. And you know what? We might actually change charts because I can't really show you guys with this big dip. We can't see what's really happening with the POC. So somebody said coin. Let's do coin. Sorry. Not trying to jump all over the place, but this will be much better for education purposes. So I'm going to draw in my POCs here really quick. So everybody should understand what this is. The point of the most buying and selling on any given day. And right now, I'm picking the ones that are going to be like the most important. And I'll explain why they're important and why others are not important in a minute. And this part might seem really tedious. It is when you first start. Once you know, like me personally, I have about 20 tickers that I follow. And every single day, I put my POCs on the chart and erase any that are no longer valid. And if any are no longer virgin POCs, I'll change the label on them so that I know that they're no longer virgin POCs. And I'll cover what a virgin POC is in a second here. Let me just get these lines drawn in a little bit. Okay. So normally, if I was really charting this, like this one, for instance, here where it says January 20th, I would come in here. Sorry, I had to cough again. And change the label to January 20th. And this is a virgin POC. And then this one down here is not a virgin. So I would change this one. And I want to show Shorty normally charts them like this. You know, it's just going to come down to personal preference. I actually write out the January part. He just puts 0118 POC. I'm not going to label all of these right now because that's just way too time consuming for the video. But just so you get the idea of how I do this and what you can do for your charts. So as I mentioned, this one here is a virgin POC. This one down here is not a virgin POC. The difference between the two is this one here, during the day when the POC is being formed, it's going to be touched a bunch of times by the stock price. In after hours and pre-market, it can still continue to be touched. But once the stock price leaves this POC that's being formed and comes back down like it does here and touches it right here on the next day after hours, it's no longer a virgin POC. Whereas this one here, once stock price left it, it hasn't come back up to it ever, right? So never gets touched again so far. And this is important. The reason being, virgin POCs are going to be much stronger than regular POCs, and they will actually end up acting as like magnets for price action. I mean, POCs act as magnets as well, but just not quite as strong as virgin POCs do. Virgin POCs will be good indefinitely on your chart, whereas a regular POC will only be good for about 30 days. Agent Casper, yeah, if price touches a virgin POC 2 weeks later, it's no longer a virgin POC. Okay. I'm just checking to make sure nobody's got any questions really quick. So now, I'm just looking to show you guys like a good example of how these get respected. So if I draw in some POCs like this or like this, and then if we hit the replay feature, and we come back to this day, go to like a 3-minute chart. Okay. Excuse me. All right. So now looking at this, and I just realized I skipped an entire part of my presentation, but we'll get back to it in a minute. So you can see this POC was formed back here. And you can see this line has slightly moved. The yellow line has moved from the POC, and that's because I switched to a 3-minute time frame. When you chart these on the 30-minute time frame, they will move when you switch to another time frame, but they're still going to be respected on the, where you plotted them on the 30-minute time frame. Leo's asking me what's the difference between VSPS and VSPS HD. I've never used the VSPS HD, but somebody asked me a question because their POCs or whatever looked completely different to mine and they couldn't understand why. And then we figured out they were using the VPSV or VSPS HD. And once they switched to it, it worked out a lot better. Sequence, if you're in the voice chat, yeah, we can. For sure.
Yeah, whatever. I don't know. Can you actually hear me right now?
Yeah, I can hear you.
Okay, cool. I didn't know if my mic was muted or not.
Yeah, just let me know how you want to do it. Hanson Ford, if appropriate for your plan, is it ever useful to combine POCs or their value areas if they are very close to each other but not right on top of each other? Yes, I do, and I'll cover that in a little bit, Hanson. So the area really quick that I forgot to cover. Actually, sorry, let me finish this train of thought. So this POC is formed back here. This one here, so on this day, a few days later, January 26th, you can see we came up and literally tapped it and then rejected, tapped it again, rejected. And finally on the third touch, it was able to break through. And then this started acting as support instead of resistance. But they will act as both support and resistance. And they work as good entries for your trades. And again, we'll cover that in a minute. But so, sorry, I know I'm like all over the place and it's because I'm not feeling well. I apologize, everybody, but all the information will be there. So what I was saying, like as a retail investor, if you buy here, you buy shares, the next time price gets to here, most retail investors are going to dump their shares, break even, and just move on and live to trade another day. And so that's why these act as, resistance, because as soon as the price gets back up to here, people will start selling off their shares and getting out. And then other people, that are invested, they might see a lot of selling pressure and decide to sell their shares as well, and it just becomes like a compounding effect. Down here is where a lot of like hedge funds, market makers are going to be buying. And you can see it lines up. We have 3 POCs that are literally almost identical down here. And so the way that you want to think about this down here is if I'm a market maker and I say I want, $500 million worth of coin, and I place a limit order here on the dark pool, as soon as I start getting a partial fill, people are going to see, oh, huge limit order on the dark pools. They're going to start buying as well. And let's say I get partially filled for like 2 million here, and then price takes off. Market makers aren't going to move their price up to chase that price action. They'll just leave their order here. So right now they have 200 million shares or $200 million worth of coin. And a couple days later, it comes back down and touches this area again, and more of their order from that dark pool gets filled. And let's say now they have 400 million and price rips up and it keeps going, doing its thing. And that order is still here waiting. And so on this day, looks like about a week and a half later, maybe 2 weeks later, we finally come back down and touch it again. And they fill the last $100 million worth of shares here, and price takes off again. And so that's how you want to think about POCs. Up here is going to be retail investors either loading shares, or you might be seeing market makers offloading shares up here. Down here, we have market makers loading on shares and sometimes retail getting out. You know, a lot of people that buy up here will be like, get out here, you know, try to save as much of my capital as possible before it goes lower. You know, those market makers are pretty good about faking us out of trades. No problem, Eric. Okay, sequence. Yeah, let me know. So right now, hopefully everybody has a good understanding of POCs, virgin POCs, and who's buying at what levels, essentially. Next, we'll go over the volume profile. And this one's always a little bit hard to show people because as the day goes on, this volume profile forms. But, you know, if that wasn't the case, it would be so easy for us to trade. But so with volume profile, it's going to be this whole area here. And what this is, oh, and while I'm thinking about it, sorry. When you load this onto your chart, you're going to want to, you can either double click on the volume profile here to edit the settings, or this down arrow and you go over to the settings right here. Why did that go away? And under inputs, you want to change your row size to 200 and your value area to 68. And then everything else you don't have to mess with. So the highlighted area here on the chart, well, actually, sorry, I'm getting ahead of myself, but so this is our volume profile. On a day like this where it's shaped like a P, generally means that we're going to be seeing the stock price go up. On a day, let's see, like this where we have like a lowercase b, I know it's not perfect because we have some volume here, but a B shape, or let's see if we can find a better one. Here's another B shape. That's, no. Here's a B. You know, we'll see a lot of selling. Okay. So I'll show you guys a little something here. Hopefully you realize there's no way I can memorize what happened on the chart before I turned off my candlesticks. I should have just turned it off before. But let me turn off this VWAP and EMA. Just by looking at the volume profile, I can give you a good idea of what happened on any given trading day. I won't be able to tell you where we opened or closed, but I can tell you what happened during the trading day. So, sorry, more coughing. This area here, there's going to be a lot of consolidation through here. We'll have a lot of consolidation through this area as well. And then there should be some consolidation right about here. Sequence, your mic's on, just so you know.
Is it really? I didn't know that.
Yeah, just, you know, a little clearing of the throat, some deep breathing.
Yeah, I'm doing that like all the time.
I mean, if it was just me and you in the chat, I'd be all for it. But
that's awesome.
I'm all about.
Yeah, I totally just now saw it like lighting up.
I'm all about that deep breathing in my ear. All right.
I figured you would be.
Yeah.
I might just keep it on for you.
Perfect. So, these here are called volume shelves. These areas where we have higher volume. And the way I like to think of volume shelves is basically like stairs or rungs on a ladder. Anywhere where there's a stair, the stock price can stop and just chill. a place like this where it's narrow, this is called a narrow belly, the stock price will quickly go from one stair or one shelf to the next. And then it can chill here, fly back down to this one and chill here. This is kind of sketch. Like, I don't want to highlight this whole area, but there's a good chance there's some consolidation through here, but it can move from here to here, probably with a little bit of consolidation as it heads through. But this area here, definitely we're moving quickly from here to here. You know, we can move from up to down and down to up very quickly. And when you go through these areas, it should be 1 or 2 candles because this is such a narrow belly here. This one, like I said, it's going to take more time to get down to here, but it will happen. So that's how you want to think about the volume profile, is if you're trading and you notice, you know, that the stock price is consolidating in here, excuse me, like this. And then all of a sudden we finally break. Right here, you want to take puts because you're probably going to fly down to here if this has already been established, you know, or same thing. If you break above, you're probably going to want to take calls because it's probably going to move pretty good outside. Okay. So now I'll turn the candlesticks back on. You guys can see. Yeah, it will look better if I do 3-minute candles. So let's do that. I'm gonna use the replay feature so we don't lose where we are. And go to 3 minutes. And there you have it. So as I was saying, a little bit of consolidation through here, right? When we did get to here and cross above, and you can see this line is almost perfect. And there's no way, like I said, there's just no way, you know, I can make this up. Like, the candlesticks were off. There's no way I'm going to memorize exactly where to draw this box. But you can't make this up. It touched the top of the box. And then when we finally crossed through, it's 2 candles. So within 6 minutes, we went from here to here. That's an easy trade if you pay attention to the volume profile. And then, like I said, once we got up here, we start consolidating. We break down, what is this, 213 to 211.50. You know, $1.50 move. I'll take this any day. Some people might consider this a fake out. I'll be happy to get in and out of this trade and take my profits. We come back in, same thing here. I'll take a trade here to the upside, get out here and call it good. This wick would not fake me out because it's going to happen so fast. You probably wouldn't be able to get in the trade in time. And then we consolidate. Maybe I get faked out here. Who knows? More consolidation. See, this is, I didn't want to make the area too big, but technically this here is another little volume shelf as well. But, you know, once you realize that you're consolidating here, you would just literally just take this box, the original box you drew. Sorry, let me get rid of this one. Why can't I see this thing? So once you figure this out, you would just take this box and extend it up, you know, to incorporate these wicks and stuff that you wouldn't want to take trades in through here. Some people do like to play the bounces, you know, from here down. It's pretty hard, but it is possible. You know, like here where you see you don't break down, you can take a bounce from here up. Again, this would be hard to get in for puts here, but it is possible. You can take puts here down. You might notice right here, hopefully you guys are noticing this, but right here, we have a lot of rejections, you know, or bounces off of the POC that's forming on the day that we're trading on. So if you were to take calls, you know, up for whatever reason here, you can almost expect a rejection here or some kind of consolidation where that POC is forming. And again, like I said, so easy puts down through to here. This one took longer than this move, but you can see it happens pretty quickly where you have that skinny belly. More consolidation through here. I mean, you guys can see how the day played out, so I'm not going to keep following this, but yeah. So that's volume profile. And then let me just remove some of this really quick because I do not need all this on my chart. Wow. I'll just delete them by hand. The next thing we're going to cover is going to be the value area. So the value area on your volume profile is going to be this yellow highlighted area. The entire volume profile includes this grayed out part at the top at the bottom. I'll highlight this with drawings so you guys can see it better. But for me as a trader, I don't normally draw lines for my volume profile because the volume profile will constantly move throughout the day as you're trading. But what's great about the volume profile is this is where 68% of the trading volume takes place on any given day. And there's a really cool rule that applies to volume to the value area, which is once the stock has established itself, like none of this is. Let me actually choose a different one because this is not the greatest example. Sorry. And I'm not looking for like ideal setups, but I want to show you guys a good example so you guys understand how to trade it. All right, here's a good one. So you can do this on any of the value areas. I'm just finding one that looks good so it's easier for me to explain how this works. Once the stock price has established itself in this area, and this is enough here, boom, 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 and then leaves the value area, or yeah, the value area and comes back into it, there's a rule called the 80% rule, which means it can cross from one side of the value area to the other. And so, and it works on both sides. So you could have took calls from here to here. And you could take puts from here to here, you know, basically. So out, back in, calls, out, back in, puts. And it's about 80% accurate. So it's a really good trade to take. Really easy for like newer traders. So next, oh, I'm on the 3-minute chart still. I just want to show you guys how I use POCs and virgin POCs. So what I'll do, and again, for this video, I'm not going to do this for every single one. But around the POC itself, I like to grab the area with the largest amount of volume and put a rectangle around it. So something like this. And then for me, you know, like market makers know where the POC is. And so they can fake us out of trades like by hitting the POC and making it look like they're going to bounce, and then they reject and come back down. And so for me, I won't take trades in this green box. Very rarely I will, but like sometimes if we come up and touch the top of it, I'll take puts if I see that we're not breaking through. But generally, I'm looking for a cross below this box to take puts. Looking at this day here is not a good example because this POC was formed on this day. But so I would be charting these after the fact. So let me just add more on. I'm not going to do too many. I don't want to waste time drawing boxes and boring people. But roughly the largest area that volume on that volume profile. So now this one here gets more interesting because we actually have, God, that train is annoying. We have two POCs here, right? And then further down, I believe, we actually have another one here. So 3 POCs. So I want to make sure I'm grabbing, you know, the largest volume for all 3 of those POCs. And then I even go and label this. So I know through here there's 3 POCs. So a good chance that I'm going to see a bounce if price comes down to here. That this is going to be a good, strong demand zone here. You know, and there's more areas on this chart. Like here, there's 1, 2, 3, 4, 5, 6. So I would make this one bigger as well to incorporate all 6 of those. Roughly something like that. And again, I would label this, you know, 6x POCs. And again, I'm going to just avoid trading in this area because it's going to consolidate. Like you can see here, when price gets to this area, even better if we go to the 3-minute chart. So you can see, you know, when we break above, we're good. Once we get back in, just consolidation. And then consolidate for the rest of the day. All of this is just consolidation. You know, this box should probably be bigger actually, to include some of this. 3-minute chart, that's where I like to trade. I guess I should have covered that as well. I'm a breakout like day trader or scalper. So I like to trade the shorter time frames. Basically, let me see if I can give a good example. If you're a swing trader, it's better to trade like the 30-minute, 1 hour, something like that. 2 hour, 1 day, 4 hour, whatever. So you can see here I have like a bear pennant. I mean a bull pennant, sorry. And let me try to get zoomed in on this so you can see it better. So with a bull pennant like this, your first trim is going to be this 272 level on the fib. So Chris, you draw your POCs on the 30-minute, and then you can trade on whatever time frame you want. I mostly trade on the 1 minute, 3 minute, and 5 minute. And out of those three, I use the 3 minute more often than anything. But so again, like a swing trader, if you're looking at the 30-minute and you find a bull flag like this, it's going to take a long time for it to play out. So with a bull flag, you draw your Fibonacci extension from the bottom of the flagpole to the top of the flagpole, and your first trim is going to be the 272 level. And here's my Fibonacci levels if anybody wants them. You can screenshot this or rewatch the video and pause it. Sorry, I had to cough again. First trim's here, the 272. And you can see this broke out of this flag right at the end of the day. So this would be a great entry for a swing trader. And at open, you crossed the 272 level where you would take your profits. And then shortly after open, you also crossed the 618, which would be your second area to take profits. So that's how that works. You know, and if you're a swing trader, like I said, you would want to look at the 30-minute, 1 hour, 2 hour, 4 hour, 1 day, 1 week, 1 month chart, whatever it is. The longer the time frame, the longer it will take for the pattern to break and the longer it will take for the pattern to play out. So I'll show you the same thing from how I trade as a scalper day trader. We'll look at the 3-minute chart and we'll look for a flag, bull flag or bear flag. It doesn't matter. Here we go. So here's my flag on a 3-minute chart. Same thing. My first trim is going to be here at the 272 level. Second trim will be 618 and third trim will be 786. And so when this breaks above, it's literally 6 minutes until I'm out of the trade. Whereas looking at it on the 30-minute trade, on the 30-minute chart, it would take overnight into the next day for that to play out. So you can see the difference. This is a 6-minute trade, in and out, and I'll make, you know, like 40% interest on my investment in those 6 minutes. Whereas if you did the swing trading method, the 30-minute chart, swung it overnight, you would probably end up making more money. Actually, you'll definitely make more money, not probably, but I don't like to swing trade, especially in the current market conditions. The reason being, after the market closes, like all it takes is for like the president's wife to fart in her sleep, and the news of that is enough to crash the market, and then my calls are dead. And I can't do anything about it. I'm locked into them until the next morning. So I can't cut my trade in the middle of the night. Whereas during the day, I can cut my trades pretty quickly. So that's how I do that. So again, let's get back to these, supply and demand zones.
Hey, man.
Hey, what's up?
Can I cut in for just a minute?
Yeah.
Yeah, so I just posted a chat message there. It's
Uh-huh.
kind of a flummox on my part about the giveaway stuff.
Yep.
So it's pretty long, but the synopsis there is I was a little confused today on what we were doing the giveaway exactly. I thought it was for the ThinkOrSwim people, kind of. Um, but it was really more at that point, it was for Shorty doing like the 2+ month people.
Mm-hmm.
He was doing them something special, I guess, with the giveaway itself. And then anybody that had been there 2 months at that point could purchase the full send script from him. So that was kind of a mix up on my part. And that's why I had everyone messaging me today if they had purchased the toss scripts and all that.
Okay.
But anyway, we'll do something special for those people here soon. Not sure what yet, but the monitor giveaway we want to do for everybody that's been here now, either December, January, February, in those 3 month periods. So not the whole 3 months, but in that period. We think that's probably the most fair thing to do
Okay.
because that's what he originally said anyway. So,
Mm-hmm.
so
Is
sorry.
that happening now or no?
A few minutes. I got to go through this list and just make sure I have everyone in here that should be it.
All right, cool.
And we'll do it then.
All right, sounds good. Let me know. All right, so we'll, in case people didn't hear, there's going to be like a monitor giveaway. If you're eligible, you're eligible. If you're not, you're not. If you're in the YouTube chat and you don't know what I'm talking about, then you are not eligible. And also the monitor giveaway has nothing to do with me or my channel as far as the YouTube channel. So, again, you just want to go through and highlight those areas on your chart, where you have the most volume on the volume profile. And actually probably, like I can look for stuff on this chart, but I want to go back to SPY. I use this chart because it's naked and I can show you guys how I draw everything. But on SPY, I can show you like actual trades I took and why this stuff is so powerful. So we're going to go to the 3-minute chart again. This is like gravy trade right here. So people in Keenan's Discord would have seen this today. This was actually from yesterday, but in Keenan's Discord today, we were talking about the megaphone, right? Anybody in the calls options would have seen the megaphone pattern, chart pattern. And we talked about how when it breaks, you get that really violent movement. Like this is a super easy trade. So not only do we have a megaphone, but we have a megaphone that's touching a supply zone. Chris, about 30 days. And then, well, actually, Chris, I'll cover that a bit more in a second because there's more to it than just a length of time. But so for this one here, again, megaphone tapping into a supply zone. There's several ways you can trade the megaphone, which is when you see a bounce at the bottom here, you can play calls up. When you see a rejection here, you can play puts down. Bounce here, calls up, rejection, puts down. And hopefully your puts down or calls up catch when it breaks above or below. And if you were lucky and grabbed puts here and played them down, like you just got paid huge. And then even if you happen to miss that move, here, there's a flag. And actually, I'm not going to draw the top. When I draw bull flags and bear flags, I just draw. So for a bear flag, I'm playing the breakdown below. So I only draw the bottom of the flag. I don't draw the pole. I'll just draw the bottom. For bull flags like this, for instance, I just draw the top of the flagpole. I mean, of the flag, because I'm just looking for that break above. I will do my Fibonacci's from, from the top of the flagpole down to find my exit points. And as you can see, this move, if you miss this first move from the megaphone and played this bear flag, this hit all of our levels as far as trims. So like if you took 3 contracts, you could sell one here, you can sell your second one here, and you can sell your third one here. But the actual megaphone itself was the play. Um, this one here is secondary. And then another great play is we have a rising wedge into a supply zone. And so if you see a rising wedge into supply or a falling wedge into demand, like you can expect a pretty massive breakout. With a rising wedge, it's neither bullish or bearish, but they generally will continue in the direction of the trend. So here we're in a downtrend. Safe to assume that this rising wedge will continue in the direction of the current trend that we're in, but that's not always the case. Sometimes they will break above. But again, I would be happy to take calls, breaking above this demand zone to the upside. But the way it played out is even better. We break the trend line and basically break the supply zone all at the same time. You grab puts here and you just play them down. Again, I always try to just grab 40% profits, but if you're riskier, that's up to you. The one thing I will do is I'll just slowly keep moving the flagpole up, the goalpost up. So once I'm in profit, sorry, more coughing. Once I'm in profit, I'll just put a stop loss, like whatever I'm willing to risk, like $20 to hopefully see more upside. And if it moves more, then I'll move that, I'll move the gold post up a few dollars, and I'll just keep moving it up until I finally get stopped out. It's a nice way to squeeze a little bit of extra money out of your trade. I will say though, for a lot of people in Keenan's Discord use Robinhood, and Robinhood is really not very good with stop losses. So you might be better off just taking your profits when you're happy with them, versus trying to mess around with sorry, I have lost my train of thought. I was trying to read and talk at the same time, and that doesn't work very well. So versus trying to get more profit and risk like losing a lot because of the stop losses not working well on Robinhood. So that's really it as far as the class is concerned. This is how I trade anyway. On this day, I just did 2 trades. It was the break of the megaphone down, and then the break of this rising wedge down. But people wanted me to look at SPY for tomorrow and give my opinion, so we'll do that now. When charting, you always want to zoom out and look at the big picture. Why is my chart's like 5 miles away? George, I like to trade on TOS. It's all a matter of opinion. I would say if you're trading on mobile, I would recommend using Webull. Or if you're trading on a tablet, I would recommend Webull as well. If you're trading on a desktop, I really like TOS, but there's other people that I know that prefer like E-Trade and stuff like that. Rick, I did explain why I have the supply and demand zones. Did you just join the Okay. I mean, so not being rude when I say this, but you can rewatch the video when we're done. I went over all of that, um, and too much for me to go back over again. So from Discord, Meal Prep is asking me, how do I signify what is demand and what is supply? I mean, so normally normally, sorry, I have so many SPY levels because of expecting tons of downside. But so normally, like supply is going to be up here. Um, the way that you think of it is like when you have like a warehouse full of whatever PlayStation 4s, um, and you reach them, it's going to sell, like the price is going to dip because there's a lot of supply up here. Down below, sorry, I need to get a drink of water really quick. Down below is going to be demand because down here we don't have a lot of supply, but we have a lot of demand, so it forces the price action up. Well, if we go to a 3-minute chart, if I have supply here driving the price down, this is now a supply zone. If I have demand here driving price up, this is now a demand zone. Um, to me, it's interchangeable basically. Like right here, this is supply. Then it becomes, or down here is demand, and then this becomes demand, right? So that's how I look at it. Um, I don't, some people will do like red for supply and green for demand, but to me, they're interchangeable. Like, I don't, it depends which way the stock breaks when it leaves this area. So from here, like I said, right now, this is a supply zone, this is a demand zone, this becomes a demand zone, right? Um, but what's great is you can see how these areas get respected, you know, after you draw them in on your chart. Makes it a lot easier to know where to take calls and puts when you have clear defined lines on your charts. Um, one thing I know I forgot to mention, and I'll just cover it right now. I apologize. Like I said, this is not going to be one of my greater videos because I'm not feeling well and I know my mind is like all over the place. But the one thing that I really love about POCs and virgin POCs versus supply and demand, or versus like supply and demand by itself, is with POCs, you have a completely objective place to draw a line on your chart. Whereas when people generally will draw supply and demand, they're just going off of what they think is supply and demand. They don't have a clear defined area on their chart. It's like, yes, this is the level. With POCs, you do get that. There's nothing subjective to it. The area that I draw around the POC is subjective, but the POC itself is completely objective. There's no subjectivity to it. And a lot of people see me, and this isn't bragging because it's nothing special. Anybody can do this, but a lot of people will see me in chat like, oh, SPY will probably reject at 4 whatever it was today, 439.27, and over and over and over again, we see it constantly rejecting there. Let me just look at questions again really quick. Yes, George, there is a link, or sorry, there is a video about setting up TOS. Can you just use the volume profile to draw supply and demand zones over several days? Sorry, VPVR. I'm not familiar with VPVR. I guess, Chris, I don't really know how to answer your question because I don't know what VPRV is. I'm sure you can. I like the way I do it. Like I said, I have a clear defined level, um, that I can see on my chart with my POCs. and they get respected over and over and over again. And so it makes for a very easy place for me to exit trades, enter trades, take calls and puts depending on which way it's breaking. Um, so for the people talking about active trader, if you're having trouble, you can always just DM me, and I can show you how I use, or actually I can show you guys after we're done. For anybody that wants to hang out, I can cover active trader. Um, does the volume based on the time range on your chart? No. So volume profile is based on oh shoot, why can't I think right now? Sequence. Do you know?
What, am
Uh,
I burping or something?
no. What is volume profiles based on? Oh, so sorry, average to true range. So it's not based on time. Um,
Oh yeah.
sorry, so that's what I was looking for. So it's not based on time, KDR. It's based on average true range. Sorry, I'm just looking through questions right now. Oh, are you talking? Sorry, Agent Casper, you're talking about this one here. This is today's, and I haven't charted SPY yet. So that's all. Normally when the day starts or after the trading day, I'll come in and I'll draw in my latest Virgin POC, and um, the current day is always going to be a Virgin POC. Um, and then I would also go in, and draw in my supply, demand, support, resistance area, whatever you want to call it. Um, and then I'll also look and see like if there's any Virgin POCs that I need to take off. Like this one here is no longer. Oh wait, no, that's after hours. Yeah, so I would just look and see if I need to change. Oh, so February 14th is no longer Virgin because it was touched here today. Um, so I just edit that, and I do this every day on my charts. So that's why that one wasn't done yet. I just haven't done it yet.
You want to do this giveaway?
Oh sure, yeah, go for it.
Sweet.
So we're gonna do the monitor giveaway really quick here. And then for anybody that wants to hang out, I mean, technically this class is over, but so for anybody that wants to hang out, we can look at SPY and see what we're gonna do tomorrow, and also I can cover active trader as well. Oh yeah, you're right. I do Trader Mike 30 minutes. Good call. Thank you. I would have ended up going back in and checking this, but yeah, thank you. I also drew it in the wrong color. So there's that too. Sorry. Coughing, everybody. Sorry.
All right, man. Can you see my screen? I don't even know if are you watching mine.
Yeah. Oh, give me a second.
Okay.
Let me get your screen. Let me pop you out for YouTube. Okay.
You see it?
Yep. You're good
Sweet.
to go.
All right, so I don't know if anybody read the, or if everyone read the how-to here, what we're going to be doing. But basically, I've got 131 digits here, sequential numbers from 1 to 131. Each one represents a member of the Discord here in my Excel sheet. And we're going to run it through this giveaway thing on random.org. Kind of works like a multi-round thing. I'm gonna start a new giveaway here, and you can see that there's roll dice. So we're gonna do this first. So that's gonna determine the number of rounds it's gonna do. We're gonna roll like a 6-sided dice, 2 of them. So it'll be like between however many numbers that is, like 2 to 12, I guess, right? So it'll be 2 to 12 rounds, I suppose. It'll be random. We're gonna name it. We're gonna punch in 131 numbers here. It's gonna run that number of rounds every time I click the next round button. So the winner will actually be the person who's number 1 on the last round. So whoever that corresponds to in the Excel sheet, I don't want to give away names or anything. So I've got all the Discord names in a Excel sheet, which each one's a row basically for the numbers. So we will, of course, and I'll contact them through a DM or whatever. And once we're done, whoever wins, and I'll let everybody else know that it's over. If that's cool.
Perfect.
So let's figure that's the most fair thing to do right now. Then we'll do something else with the toss people later on that purchase the scripts and all that. Kind of a flummox on my part, sorry.
It doesn't really matter. This is all pre-programmed for me to win anyway. Sequence pre-coded everything. So
yeah, you're gonna see a bunch of hyphens. If I'm talking, I've got my stupid push to talk. Hold on, let me turn that off.
That's dope.
Okay, yeah, let's see. Can you hear me now? Is that better?
Yeah,
okay.
We got you.
No more hyphens. Anyway, so now I can just talk and cough again.
Yes, breathe deeply.
Oh. There we go. So basically, we've got this punched in 131 numbers here, so that each one represents a person that's in the drawing. I'm not going to say who's in, who's out. We went through that a minute ago with the up to March thing. So basically, I'm going to do roll 2d6 here, which is two-sided dice, or six-sided dice, two of them. It's going to give us a number. So we got 6. We're going to do 6 rounds, so you can see it punches in 6 rounds. So let me name this. I don't know if it really matters. Let's shorty
49-inch
orbit 49-inch, or we're just gonna name it monitor or giveaway or something.
Oh, that's not as exciting as that 49-inch super duper monitor.
Exciting. That work?
Yeah, way more exciting.
Okay, there we go. So yeah, that's it. We're gonna do 6 rounds. You can see there's 131 entries. So I'm going to click this. It's going to go 6 times, 6 different rounds. So whoever's number 1 at the end, nobody's going to know unless I message them who won, unless they want to tell everyone and brag. But yeah, so whoever's in this first spot at the end of the round. So I can actually shrink this down, I believe, if we want. I can run the last round, and well, it doesn't matter because nobody names in it. Never mind. We're just going to go with the numbers. Okay, you ready? Doing the giveaway. Here we go. Anybody got any questions before I start? No? Yes. 5, 4, 3, 2, 1. Okay, go. So I got to pay for it. Look, I got to pay $1 to do this, guys.
Jeez.
How much I love you. All right, so that's round 1. So you can see round 1, number 92 won, whoever that is. All right, now I can click next round. We can delay this as long as we want. If you guys want to like talk about something,
we should talk about who number 92 is right now.
I could look and see, and I could never tell you guys. How cool is that?
Yeah, that's brutal.
But I'm not going to do it. I'm not going to do it.
That's brutal.
I know, it really is. You ready for it? You know what's worse is actually seeing your name there.
That's
why I'm not using names. It's horrible. I've seen this. I've been in one of these before where your name's popping up and you pop up like you're on like round 5 and then you got to go 6 and you're like here. And you know what I mean?
That's
or
messed
you're like
up.
Number 2. Oh, it's horrible. Then somebody else wins. Anyway.
KSSM.
All right, round 4.
I'm not even in the drawing, bro. So.
All right, round 2. Yeah, we didn't include any of the moderators or anyone in this one. We'll do something for those guys too. How about that? Soon.
We just work for nothing and we're not eligible for the drawing.
Hey man, that's the way it goes, right?
Yep.
It's life. 46. Whoever that is. Sorry. Round 3. Number 101. Okay. So you guys could be winning right now. You could just take it that way, like I almost won. I think I almost won. I don't know.
You're all winners in my mind.
Right. Yeah. Yeah, 10. Okay, 2 more rounds. You ready? All right, next round's the winner. So this is not the winner. Whoever 19 is, it should be really mad right now.
Be very.
They should be jumping.
Imagine you're 19 if you don't.
Unless you get number 1 on number round 6, you're going to be amazing because that would be awesome. 131 people. All right, so this is the final round.
If you're 1 now, then you weren't 19, so you don't have to be mad.
That's true. All right, here we go. You ready? We're going to do it. We're going to do it. We're going to do it. Okay. There we are, 14, whoever that is. Is that me? No, I didn't win. I'm just kidding. Okay, so 14. I don't know who that is.
Congratulations, number 14.
Number 14 is the winner. All right, so that's the most fair way I could think.
Oh, that is funny. Number 1 is second.
It is, yeah, you're right.
Oh, I just realized I didn't show this on the screen. I'm so retarded.
That's okay. I'm streaming in Discord, so I don't know
No,
if
I'm saying
anybody.
I didn't put it on the YouTube.
Oh, so they're just like, what?
Sorry, everybody. Here it is.
Yay, number 14. Good job. All right, so that's it. Number 14 wins. I'll contact that person in a few minutes, and let me write down number 14 so I don't screw that up. That's it, man. That's it. That's it. That's it. I'll let you guys know if they want to tell you. They can tell you, and it's up to them. Um,
Hey, you need to tell us in the staff chat who won. I want to know.
no, I don't know, man. I don't know if I can do that. I don't
You
know. We'll see.
got to. That's the
You want to see who
private.
was in last place? Let's see who was in last place.
Oh, that's
Let's,
messed up.
number 62, man. Number 62.
Number
Whoever that
62
was
would be
last
really
place.
upset right now.
Yeah, they should be.
He didn't even get second.
All right, so 14. All right, good job, guys. Thank you. Appreciate that.
All right, thanks, Sequence.
Yeah, man.
Later, brother.
Yep.
All right, everybody. Sorry about that very rude interruption. No, I'm playing. Sequence. People are asking what Discord. I'm not. That's not going to happen in this chat because we have people here from different Discords, and I'm not trying to like self promote or anything and cause problems on other Discords or anything like that. Okay. So for the people that stuck around, let's actually do Spy last. Let's do Active Trader. So if you use ThinkOrSwim, this is how I set up Active Trader. You can't see my entire screen, but I have like 12 charts here that I watch during the day on one monitor. I have ES and Q futures that I watch, AD and VIX that I watch all during the day on another monitor as well. And then I also always have TradingView open as well that I'm watching. And then I'll have 5 charts here that I'm watching. And my Active Trader here. So for Active Trader, there's a few things. This grid up here, you click on Customize Grid. And this is going to be on your flexible grid on TOS. And on this one down here, or whichever one you want to put your Active Trader on, you click on Sidebar. And then normally you'll just have, like the chart highlighted here. So you uncheck Heart Chart and click on AT for Active Trader. Then I uncheck the sidebar because I don't like to see it. And then you click on or uncheck Customize Grid. Once you've done that, you'll have a grid with Active Trader in it. And for the settings, quantity with buttons will be down here. And auto send on and off will be down here as well. I move both of those up. Click OK. And quantity with buttons gives you this line here where you can adjust how many contracts you're buying. And auto send obviously means as soon as you click, it's going to send the order. You can also market buy, market sell, or if you placed an order like way up here and you're now looking at the price down here and you want to cancel it, you can click cancel, cancel all. You could do cancel all buy, cancel all sell. So these are handy to have up here. And also, you can quickly adjust how many contracts you're buying. Then the other thing I do is, so you can see my watch list here has the number 2 on it, this yellow number 2. And up here I have a yellow number 2. That means that if this is number 2 and this watch list is number 2, anything I have here is linked to here. So I can click on any of these and it'll take me to like this AMD 115 put for Friday expiration. And so then what I do is if I'm looking to trade something like SPY, well, this is today's expiration. We won't look at those. Here's Friday. If I'm looking at calls, I can right click and click add to watch list. And then same thing, for puts, right click, add to watch list, and it pops up over here. So then when I'm getting ready to trade, like for example, where's this guy? If we go to the 3-minute really quick, there's a few ways to do this. For people who have this is too beautiful. Our clouds literally like such a perfect bounce off the clouds and then into this rising wedge. But so if I'm looking here, for example, and I'm wanting to take puts when it crosses below this green line, what I'll do is I would click on my SPY puts here, and you can see if I'm hovering on the prices down here, it says like buy limit 1 over here, and over here it says sell limit 1. If I go above where price is trading, it'll say buy 1 stop, which basically means if the price comes to here, it'll fill this order. So if I'm right here and getting close to crossing the line, I can put that stop order in, and when it crosses, my order will get filled. I'll never be able to get it exact. What am I doing? Because I'm looking at TradingView and TOS at the same time, but close enough for my likings. That's how I like to enter the trades. Or if an area has, like, if it's already broken a trend and I want to hop in, then I'll, click down here on a limit order somewhere. The other thing with these is if I click here and I change my mind, I can always move this down by just clicking and dragging it, or move it up. And then I can cancel it by pressing this X, or cancel it by cancel all, or cancel buy. And then when I'm ready to sell, I had to click to something I actually have a contract on. I can come over here. I can do it like a limit sell if I want to sell it when it hits $35. Or if I want to get out now, I can move my price down here where there's 19 buyers already. Or if I want to make sure I get a fill, there's 17 buyers here at 24. And so that's how I use Active Trader. Hopefully that's pretty clear and concise for everybody. Sorry, let me get my peeps back on the screen so I can see if anybody's asking questions. Brian, if you want to say it, that's perfectly fine. Because you're not bound to anybody being in this chat. But again, for me, since I have people here from different Discords, I don't want to be accused of like promoting or anything like that. So for SPY now, let's look at SPY. Before I even look at SPY, I'm just going to say with, the current situation going on in the world, like, I don't know that technical analysis is even going to matter for tomorrow. If you ask me my opinion, I think we're selling off tomorrow. I think they've been like kicking the can down the road as much as they can. And market makers are probably, God, this is so far away, selling calls to hedge their position before this all comes crashing down. But that's just my opinion. So like I said, I always start zoomed out. Key things that I see right here is like we're in a downtrend. Um, this is a double bottom right here. I'm sure everybody can see that, right? This wick and this wick here. And that's where SPY bounced today. Or I don't know that that's where it bounced today. Sorry, that's where it bounced on the monthly. Excuse me. We have a gap here. And what's important about that is, like 98% of all gaps get filled. So it's good to have them on your charts because eventually, more likely than not, SPY will come back down here and fill this gap. From here, I'll go out to the 1 week chart. See if I see of anything of importance. It looks like we might be forming a head and shoulders on the weekly. I'm sure everybody could see that, right? And then I go to the 4-day. I don't really expect to see much very often between the 4-day and the week. From here, I go to the 2-day. Two-day, we might be forming an inverse head and shoulders, right? Then I'll go to the 1-day. Seeing more just of the inverse head and shoulders forming, but it's not as defined on the 1-day. So here we have like a triple bottom here, here, and here on the 1-day. So that's a pretty good level I would mark on my chart. When we come back down to there, we'll probably see a bounce again. And then from here, I like to look at the 65-minute. I hate it when I accidentally move a line. The reason for the 65-minute, and again, sorry, I know my SPY chart is really crowded, but I drew in all these lines down below because I am expecting a pretty good sell-off. So the reason for 65-minute is the only way you can divide the full trading day equally is by using a 65-minute chart. No other time frame will divide into whatever it is, 7.5 hours. I don't remember the exact number of hours. I think it's 7.5 hours. Might be 6.5 hours. Actually, yeah, it's 6.5 hours. Sorry. So the 65-minute will divide into it equally. And a lot of times you'll see like things of significance there on the 65-minute chart. So this one I'm looking at a little bit closer. See if I see any patterns hopping out at me that might play out tomorrow. And I do. So here, how do I draw this? I know there's got to be something like that. Oh, shoot. So we have a cup and handle forming or formed on the 65-minute on SPY here. And so when we break the handle, this is going to be a measured move. This would probably look a lot cleaner if I turned off extended hours, but it's a clean cup and handle. We're going to want to measure this out. So you measure from, actually, I don't know that this matters. You measure the bowl to the top, the neckline, 2.47%. And then you measure from your neckline. There's no way this plays out. There's just no way. Watch me be wrong. You know, more often than not, you see setups, and you think it's just not possible for it to play out. And then some news comes out that like makes the market rocket and makes this news play out. Or I mean, makes this pattern play out. If this does play out, it's basically saying SPY is going to 449. Yeah, on the button, which lines up with our February 7th POC. Like, you can't make this up. It's like 17 cents away from the POC. And I could have even just measured it. I could have missed the measurement slightly. I don't know. Let me see. I want to try to get this as close as possible to the neckline. 247. Yeah, so we're 14 cents away from the POC. So for people wanting to know what happens with SPY, technically if we break this handle trend line here to the upside, we should see 449. I'm super hesitant to say that. Like I said, with the current situation of the world, and with war going on and everything, this seems pretty suspect to me. But that is what the pattern is saying. So that's the expected move. So once I've checked 65 minutes, I check the 30-minute. And again, same thing. You know, here we have a bull flag, pretty big one. God, this is just like more confirmation that this might happen. Let's see. I don't want to take that wick, but let's just see how high this is saying we should go. If we got to the third trim, it's 446. So we have and now I'm even more curious if I do take this wick. 448.09. So we have a cup and handle on the 65-minute. We have a bull flag on the 30-minute. For anybody trading SPY tomorrow, I would definitely, you know, look to grab this on the break of this trend line here. If it doesn't happen pre-market, I would definitely look to play this. And this is where I stop. So when I get to the 30-minute, when I'm looking after hours, I'll normally now just draw in my most recent version POC. I'll remove any supply and demand zones that I need to remove. Any POCs that have been touched that were before virgin POCs, I'll change them to POCs. And then The only other thing I really do that I haven't done yet is on the 1-day chart. Um, I always just move this previous low of day and previous high of day, because those are pretty important levels on your next trading day. Um, so that is going to be it, everybody. Um, I'll hang out for a minute in case there's any questions, but if not, much love, everybody. Thanks for coming and hanging out. I know it's a pretty long class. We're here for like an hour and a half so far, um, so it's a lot. Um, but I appreciate everybody that came and stuck around. Hopefully, you guys learned something. Um, hopefully this helps you guys out. Um, but yeah, like I said, that's going to be it for me. Much love. Once again, thanks for coming. When do I remove old zones? Yeah, so sorry, Hanson. I think you asked that and I didn't answer. Um, yeah, so basically, if I see on the 30-minute chart, oh shoot, sorry. If I see that areas are just being blown through without being respected at all, I'll start taking them off my chart. But what I'll do is, like, for instance, this one here, since I'm looking at wow, excuse me. Since I'm looking at a 30-minute chart, it looks like this was blown through. But I guarantee if I switch to a 3-minute chart, it's going to consolidate here. And we can see here it touched it and respected it. Here it touched it. So I'm pretty sure this, it's going to stay on my chart. Here it was basically touched as well. But so what I do is I use the replay feature. And I'll just go to like the previous candle. The reason I use the replay feature is if I switch to 3 minutes and it's like 2 weeks back, it takes forever to try to find it. So little, I guess, tip of the night, replay feature, go the candle ahead of the one you want to look at, switch to 3 minutes. And now you could see, respected here, we're respecting here, we consolidate a tiny bit. And this, again, it's acting as support here. So it goes from resistance to support. So this is still being respected. Once I find one that's not being respected, yeah, it's coming right off my chart, like no questions asked. All right. No problem, Marlon. Thanks for hanging out, man. Thank you, George. Thanks, Tari. Thanks, Hanson. Appreciate that. Yes, meal prep. 6 POCs. Crazy. Thanks, Mula. All right. That looks like that's it for the questions, everybody. So once again, much love. Thanks for hanging out. Thanks, DR. And I'll catch you all in the next one. I'll have a video coming out tomorrow. So I guess look for that one as well. All right.